Warren Buffett has reportedly sold approximately 13% of his holdings in Apple. Is this a sign of doom and gloom for the tech giant? Stick around to the end of this video to find out, because we all know that watching a video about a billionaire selling some of his stock is exactly how we should be spending our time. Buffett first bought Apple shares in 2016, and he rarely dollar-cost averages into companies he's interested in over a long period of time. In 2016, Berkshire had $20.5 billion in cash and cash equivalents, such as short-term T-bills and money market securities. Oh, to have such problems. However, Apple's net income peaked in 2021 and has been steadily declining since. The company has been buying back shares over the past several years, but its ratio of return of cash to net income peaked in 2020 and has been falling since. How dare they not continue to grow at an exponential rate? Apple's share price had been falling since Q1 2015, which is inconsistent with the narrative of a fast-growing company. The data reveals an inconvenient truth about Apple's growth prospect. But who needs growth when you can just sit on a pile of cash like a dragon? Despite this, Apple has delivered strong operating income and net income growth, driven by increases in hardware shipments and service sales. Net income peaked in 2021, but the number of outstanding shares has been steadily decreasing, reducing the number of shares that would receive a dividend or could be bought back from the open market. So, they're still making money, but it's not enough for the shareholders who are used to getting rich overnight. Apple paid Berkshire Hathaway $878 million in dividend income at its current payout rate, and Buffett's current position in the company has seen a total return of 378% since he first bought it. But, that's not enough for the Oracle of Omaha. He needs more. In May 2024, Warren Buffett, the most exceptional investor in history, sold off 13% of his Apple shares, amounting to a staggering $20 billion. This has caused Berkshire's cash reserves to surge to a historic high of $190 billion. It's like watching a billionaire play Monopoly with real money. Many analysts, from fund managers to investment bankers and economists, have speculated on the implications of this move for both the stock market and the broader economy. Some interpret this cashing out and the hoarding of liquid assets as a sign that Buffett anticipates a monumental economic downturn, with this cash serving as his war chest for the anticipated bottom fishing opportunity, because, the world is just one big game of poker to these guys. At the yearly shareholders meeting, Buffett had this to say about Apple stock. Should something dramatic happen that really changes capital allocation, we will still have Apple as our largest investment. Under the current conditions and considering the alternatives in the equity markets and global events, we find holding cash quite attractive. Translation: I'm sitting on a pile of money because I can, and I don't trust the market. Buffett's cash reserves have hit an all-time high of $190 billion, prompting many to speculate that he's anticipating a market correction or even a crash. With Berkshire not utilizing its $190 billion cash reserve, many believe Buffett sees the market as an overinflated bubble. But it's not like he's going to use that money to solve any real-world problems. However, a plausible explanation for this growth of cash reserves is the current favorable cash yield rates. Buffett's $190 billion cash reserve isn't solely in liquid form. Much of it is in short-term U.S. Treasury bills, which offer a return of principal plus interest in 3 months. With Treasury yields around 5.4%, it's an attractive risk-free investment, readily accessible. Because the world is just one big casino to these guys. When asked why he's sitting on $168 billion in cash, which has now exceeded $182 billion, and what he's waiting for, Buffett responded that no one at the table has an effective use for it. Hence, the reserve remains unused, irrespective of a 5.4% yield. Translation: I have more money than I know what to do with, and I'm not going to share it with anyone. Buffett isn't chasing yields with his cash holdings. He genuinely hasn't found a compelling way to spend it, indicating no suitable assets for acquisition in the market. This suggests a belief that asset prices are severely overestimated and future prospects are bleak. If the market is overvalued, a crash is necessary to adjust to undervaluation, presenting an opportunity for wise purchases. Many conclude from Buffett's actions that he's waiting for a market collapse. Because, it's not like he's going to use that money to invest in something that could actually benefit society. The moral of the story: watch what Warren Buffett does more than what he says, because, it's not like he's going to tell you what he's really thinking.